Good day, students. Good day, viewers. I'm so glad to have you once again in this video lessons for commerce. Yeah, we're going to look at another aspect of documents that are used in foreign trade. This is the second part of it. We did this first part before now, so we're looking at the second part of it. In the previous part, we looked at documents like consular invoice, bill of lading, ship manifest, and the certificate of origin, indent, and so on. But this time around, we're looking at other types of documents that are used in foreign trade, which include the MATES receipt, bill of exchange, export invoice, ship report, freight note. Yes, these are the areas we're going to look at today, or this particular video lesson for commerce consideration. All right. What is a MATES receipt? You know that these documents that we're talking about here are documents that facilitate transaction on an international basis. For one reason or the other, they are very important to aid trade to succeed. And so without them, anybody can assume one thing or the other, and that will be lawlessness. But with these documents, it creates orderliness, it creates consistency, it creates decorum, all right? It gives confidence, all right? So these are the things, these are the reasons why these documents become very necessary and important to be used in carrying out international transactions. So one of them is called MATES receipt or MATES receipts. So what's a MATES receipt? A MATES receipt is a document issued by the chief officer of a ship, all right, to acknowledge the receipt of cargo on board. Once, like a driver of a vehicle, once your goods, people are entered your car, full load, you can now give something like, okay, this is what I'm going with. Thank you very much. I've received these goods in my car. I acknowledge that they are already in my possession, so I'm going with them. So in this case, in the ship, right, the ship officer will acknowledge the receipt of the goods on board before it can leave. That's what's called a MATES receipt. Now, it serves as an initial confirmation before the issuance of bill of lading, all right? Yes, which is the primary document of title in shipping. We know that already. So a MATES receipt is the first that will come in so that the ship officer, right, can acknowledge that these are the goods that he can attest that are in his vessel before they can leave. So that's what the MATES receipt serves for us. And then that also does not represent the bill of title, the document of title, which is the bill of lading. So, but of course, it shows that these things have been received into his custody. Now, key features of a MATES receipt. What are the things you can find in a MATES receipt? We have 2, acknowledgement of cargo. The MATES receipt shows that the chief officer has acknowledged that he has received this amount of cargo in his vessel or ship. It confirms that the cargo has been loaded onto the vessel or ship. Number 2 is that prima facie evidence. While not a document of title, it acts as an evidence that the goods are on board. All right, it's called prima facie evidence. That is a representative evidence, okay, of what you have. So it's not representing the title of goods, of ownership of goods, but it shows that I have these things in my possession, in my vessel before it can go. So we have 2 types of MATES receipts. We have a clean MATES receipt. This indicates that the goods are in good condition with no visible defects, just like you have it in what? In a bill of lading, right? Because it can serve, but not exactly the same thing, all right? So, but you have 2 types of MATES receipt. We have a clean MATES receipt. This shows that there's no damage to the goods in my possession as a ship officer, all right? Good. Then number 2, second part is qualified MATES receipt. These notes any issue with the cargo, such as damage or improper. While in the other document we mentioned before now, which is the other document that has bill of lading, a dirty bill of lading is also showing damage, but this case is called it qualified. Please take note. It's called qualified MATES receipt, not dirty MATES receipt, even though we have it as clean and dirty. But this one says what? This one says it's qualified, all right, MATES receipt. It is qualified. It is in quality base. All right, it's in quality base, in good quality, in improper quality, something like that. So yes, so you have, it shows that there's a degree of improper packaging, there's a degree of damage, there's an irregularity in the cargo being deposited on board for him to carry. So any of these two types that is issued shows that, okay, come, I have this goods in my possession, but one is good, the other one is not proper. All right, that's what. So this is an example of a made receipt. Wow, beautiful. Okay, look at it. Even though, of course, some of the write-ups are not in English, of course, but let's have to make with it. So, but this is how they look, what it looks like, a made receipt. This is the captain of the ship, right, or the chief officer of the ship, all right, that is acknowledging this document. Okay, we have bill of exchange, one of the most common documents in international trade. The bill of exchange is one of the most common, right, document that everybody knows in international trade. This is a bill. This is a written document used in trade and finance that acts as an unconditional order for payment. It's a check-like document, all right? It resembles a check, but in this case, it's used for international payment for goods and services, right? So it's a document written to use as a finance or acts as a condition for payment, all right? Unconditional order for payment. It is issued by one party, the drawer, that is the originator of the bill, to another party, the drawee, to a payer, all right? Instructing them to pay, that is the drawee now, instructing them to pay a specific amount of money to a third party, that is the payee, the beneficiary of the content of the bill of exchange, the one to whom it is addressed to, order, or either immediately or at a future determinable date. So this is originated by a drawer, the person who is going to make the payment, the person whose money is going to be used to make the payment, and then addressed to the payer, the institution that pays, all right, or the personality that will make the payment, who is the drawee. Okay, in this case, let's put it in a very clear terms. I am a bank account holder, I'm a drawer, I issue a check to my bank to make payment to my customer who has sold something to me, all right? So yes, that's exactly what it looks like. So in this case, it's international application. So I am the drawer who raises this check, this bill, give it to my bank or the exporter's bank to make some payment on behalf of the third party, which is the payee, as the benefit for the goods I'm buying from him or her or from them. So that's what it means, all right? So it's a written document used in trade and finance that acts as an unconditional order for payment. It is issued by one party, the drawer, to another party, who is the drawee, for them to make payment of a specific amount of money to the third party, who is the payee, right, the beneficiary of the money, either immediately or at a future date. So there are two types of bill of lading. There are two types of bill of lading. One is called inland bill of lading. In this case, when it's specialized like this, it means that this document is used within the country, okay? Of course, this is used within the country, all right? It makes payment within the country, okay? Which, of course, the foreign bill of lading is used to make payment outside the country, all right? So yes, key features of an inland bill of lading. What is it? What are the things that you can find in an inland bill of lading? It is domestically used. That is, it is exclusively used to trade within the country. Number two is that it has a legal framework. It is governed by the laws and regulations of the issuing country. That, like Nigeria in this case, it is governed by the laws of Nigeria because it is issued within Nigeria and can be used for a very huge amount of transaction, okay? Yes, it actually involves huge amount of transaction, not just ordinary check. All right, so yes, that's what it is. So it is governed by the laws of Nigeria, the financial laws of Nigeria, I say, in this case, in Nigeria. Then number three, simplified process, okay? It makes trading very simplified. Since it doesn't involve cross-border trade, it avoids complexities like foreign exchange rates or international shipping documents, which makes it more complex or cumbersome to trade. So because it's inland, it makes trade a simplified process to take place, all right? So because of that, that's what you must take note of about inland bill of exchange. And then key features of foreign bill of exchange include the following. It's a cross-border transaction. It's a trade transaction that happens between two or more countries. It is used for preventing for payments involving two or more countries, all right, because it involves cross-border trading, all right. So number two is that currency exchange is involved as well. It often involves payments in foreign currencies which may require conversion. These are the key things you must take note about foreign bill of exchange. Number three is that it has legal framework. It is governed by the international trade laws and agreements, not just a particular country's laws now. The laws of Nigeria and the laws of the exporting country must align, in this case, to really make trade smooth. So there must be a synergy between the law of the importing country and the law of the exporting country so that you can have an agreement in the process of trade. So that it has a legal framework that must be abided to. Then acceptance is one of the things you must take note about. Around. So the drawee must accept the bill for it to become legally binding. Okay? The one who is going to make the payment, that is the drawee, the bank, the financial institutions, all right, the personnel that will be involved in paying the money to the recipient, to the payee, must accept it for it to come what? Legally binding. If not, it will not be legally binding, so it will not be applicable or useful. So these are the key features you must take note about the foreign bill of exchange. So key features include the following. It is unconditional, all right? It is what? Unconditional. For bill of lading generally, all right? One of the things you must know, whether it is foreign or whether it's inland, is what? They are unconditional order. All right? You must make the payment once it is binding or valid. Payment must be made without any conditions attached. As far as it becomes binding, all right, or legally applicable, you must make the payment. All right? So a specified amount is written. The sum of the money to be paid is clearly stated. All right? There's no adding or reducing it. Okay? It's always there. You know how much it is. Number three is that it has a time frame. The payment can be due on a demand or at a fixed future date. So it must be stated there, all right? There's a time frame for it to be applicable or administered. So these are things you must take note about the bill of exchange. So we already mentioned this earlier on, but we want to give it a final touch so that you understand it better. In the bill of exchange, which also is the same thing as check, all right? But in this case, this is a larger transaction volume that involves bill of exchange, and more of it internationally said. So now we have three parties to a bill of exchange, which also is known as a check, all right? So we have the drawer. The drawer in this case is the person who creates the bill and orders payment. Now, number two is the drawee. The drawee is the person or the entity responsible for making the payment, usually at the financial institution, all right? It starts with, so this is the case where you must know that the drawee in this relationship of trade is the person who is going to pay the money. It could be an individual, it could be an organization, all right? It could be a bank, an institution. So whoever is responsible for making the payment is a drawee. Then the payee is the person who is entitled to receive money being paid or who is going to benefit from the payment being made, all right? So it's the person or entity who receives the payment. These are the things that are applicable to bill of lading or, of course, these financial documents, all right? Examples or scenario for the use of bill of lading. Imagine a seller ships goods to a buyer. A seller ships goods to a buyer, all right? The seller issues a bill of lading or exchange, instructing the buyer to pay a certain amount of money to the seller's bank within 30 days. The buyer accepts the bill, agrees to the payment terms. The document then serves as a formal agreement for the transaction to take place, all right? If the buyer did not accept it through his bank, it cannot be valid, all right? So yes, the buyer must accept it through his bank that's going to make the payment for him, okay, before it becomes what? Legally binding or applicable, all right? So take note of that. This is a sample of the bill of exchange, all right? Bill of exchange, a sample. I showed you it's like a check-like document, right? In this case, this bill was written on the 21st of April 2025. Wow, very close by, right? To the drawee's name, okay? The bank, right? Demanding them to make payments of so and so amount of money. The order of what? The payee. all right, in figures. So it is signed by the drawer and the payee's name is written there. Thank you. So it's an example of what the bill of exchange. It's a check-like document, okay? Beautiful. So export invoice is another document that is used in international trade. It's a document that is sent by the exporter to the importer. Follow this trend. Export invoice sent by the exporter to the importer, giving full description or complete summary of the goods dispatched. Full description or complete summary of the goods being sent by him, the exporter, to the importer. It shows the list of the goods, the terms of sales, the quantity and price, name of ship, and the total amount to be paid. So yes, it gives a complete information to the importer from the exporter on what to be paid for. That's what we call an export invoice, all right? Of course, you know, invoice is a summary of the transaction between the buyer and the seller. It's not true. So now this is an export invoice coming from the exporter to the what? The importer, to know exactly what you're paying for, all right? A summary of what you're going to make payment for or that you have paid for, okay? The key features of an export invoice include the following. Description of goods includes details of such as the type of the good, the quantity, the weight, and the value of the goods being exported. That's the description of the goods. Then exporter and importer details. It has a list of the names of the exporter and importer, the addresses and the contact information of both parties are also there. They are listed in the export invoice. Then payment terms, specify the agreed upon payment method, currency, or due date. So is it by transfer? Is it by credit transfer? Is it by bill of exchange, or whichever method is applicable? All right? You will know it will be stated in the export invoice. Okay? So payment terminologies. Okay, that's already explained. Shipping information. This include details about the mode of transport. Is it to be transported by air, or by sea, or by land? The port of loading, where is it being loaded? In a country, you may have 2, 3, 4, 5, or numerous ports from which goods can be exported to other countries. So they will explain or detail the particular port of dispatch and the destination where the goods is going to. So it will be told that the goods is coming to Nigeria, Lagos, Nigeria, Apapa Port, Lagos, Nigeria, or Tinkan Island Port, Lagos, Nigeria. So it will be clearly detailed there, all right? So yes, you have tax and duty information. It provides information on applicable taxes, duties, and any other exemptions that are applicable in this case. So tax and duty information are also provided in export invoice. Compliance, of course, it ensures that the adherence to international trade laws and customs requirements. So it makes sure that this document or the transaction is also in line with the international trade laws that bind to both countries in trade. Okay, so that's one of the things you must take note that is found, or that explains the importance of export invoice. So what are the importance of export invoices now? Now it serves as a customs clearance document. This document is also used by the customs to verify shipment and calculate the duties or taxes as well. In the absence of the other relevant, most needed documents, this can also serve as a source of determining duties or taxes to be paid on imported goods or the exported ones, all right? Then a proof of transaction, it acts as an evidence of sales and agreement between the exporter and the importer. Of course, it shows that this business has taken place between the exporter and the importer. It shows that there's a document, or there's an amount of goods that are being moved from one country to the other, whereby these two parties are already in agreement, they already transacted the business correctly in good, in approvable conditions. So yes, that's what it proves as well. Then facilitate payment. This document also provides the necessary details for importers to process payment. I think before a bill of lading and a bill of exchange is raised, this document must be produced first, okay, before the bill of lading is raised, all right? So yes, with this, the importer can now go ahead and raise the bill of lading and send to the customer in charge, all right? So yes, to the exporter's bank. So yes, or facilitate payments. Okay, it also have a form of importance to help insurance claims, right? It can be used as a proof in case of damage or loss during transit. It can serve as one of the documents that can be used to validate insurance claim when there's any loss suffered in transit. So these are the reasons why we can see this document as very important in international trade. So yes, we have another one. Ship report is another document. Ship report is another document to be used. So, what's a ship report? This is a document that must be submitted by the shipmaster to the customs authority on arrival at the port. This document must be submitted by the who? The shipmaster. All right? Okay. The other one is saying what that other one I mentioned before was ship manifest. Okay, which is signed by the chief officer of the ship, which is also here. The ship report must be submitted to the ship, the customs authority on arrival, which shows the particulars of the ship, the crew, passengers, cargoes, and port of departure. It actually gives a very good glance of where the ship is coming from and what is contained in the ship. The goods cannot be offloaded until this report is received by the customs and verified. Okay, it can just dock and nothing will happen to the goods until the customs have this ship report and verify that it's intact and nothing bad has gone through it. So once they validate this document and verify it, you can now begin to clear the goods off the ship, right? So that's what the ship report represents. I think it comes from the ship manifest, right? When the ship manifest, then onward to become what? A ship report at the end of the journey. Freight note is another document used in international trade. A freight note is a document that is used in trade, foreign trade, to outline the details and costs associated with transporting the goods. It outlines what the detail and costs associated with transporting the goods or the cargo in the ship. This document shows details of the costs that was incurred or that's associated with the transporting of the goods only, all right? It serves as a record for shipment and ensures transparency between the shippers and the carrier. That every charges to be made on this transport is clearly stated in the freight note. Whatever single charge an exporter will pay or the exporter will pay, depending on who is paying what, all right, at any point in time, is duly noted in the freight note. It's clear enough in the freight note, right? That makes it easy for other form of calculations to be made, all right, or transaction to be executed. That's freight note. The key elements of a freight note involve the following: that the shipment's details are there, all right. It includes information about the sender, that is the shipper, and the receiver, the consignee, the person who is going to receive the good at the destination, as well as the origin and destination of the shipment. It tells you details of the movement of the goods, who is selling, who is buying, who is receiving, where is it going to, okay? Then you have description of the goods, which tells you the full detail about the items being shipped from one place to another, the volume, the weight, the quantity, the quality, the species or the specifications, all right? The different variants of the goods is also stated in the freight note. Freight charges. This lists the cost associated with importing or transporting the goods, all right? That includes handling fees, fuel surcharges, all right, and other additional costs that is applicable to the transportation of these goods, all right, is there. The intent of payment specifies how and when the payment for the freight charges should be made. It tells the parties involved when and how to make the payment, all right? That's what is contained as well. Then carrier information. This includes details about the carrier's responsibility for transporting the goods, that is, what the carrier should do, that is the ship itself or the owner of the transport company, what they should do or what they are supposed to release as their details, what you must know about what they do, all right, who they are. is also contained in the freight note. So these are the key elements you must take note of in a freight note. How important is a freight note? A freight note is important because it shows transparency. It clearly outlines the costs and details of the shipment, ensuring there is no hidden fees to be charged. It makes you know exactly what you're going to spend while moving these goods from one place to another as the importer or the exporter as well. It facilitates payment. It acts as a formal request for payment from the carrier to the shipper or consignee. Okay? Yes, it makes those who are supposed to pay one money or the other to know how much they are going to pay and pay at exactly the required time. Record keeping, it serves as a reference to accounting purposes or in case of disputes. Yes, it helps us to bring us back to the basis when discussing financial involvement, all right? If there's any kind of confusion, you go back to a freight note to see which aspect of the payment has not been done and which one was done in absentia or without even proper consideration. So these are the things we have learned today. We have also covered another aspect of what? International trade documents, all right? So you can imagine, they are very important. None of them is useless. One way or the other, you have them to be serving a very important purpose in trade. Okay, let's go ahead and see some questions that are related to this particular topic we have learned now. Let's see again. Anyone who don't have, will skip it. So the arrangement for the conveyance of goods abroad is performed by who? We did not do this. We did not do this. Which of the following is not contained in consignment note? Okay. Name of the buyer, name of the seller, description of the goods, cost of the goods. Cost of the goods is the answer. Which of the following is used to ascertain the correct value of imports for purpose of ascertaining custom duty? All right, so we have passed this one. This question is from our previous class, but we'll also use it to answer the question. Ascertain the correct value of imports for purpose of ascertaining there is what bill of lading in this case because there's only one correct here. Which of the following is regarded as a document of title in foreign trade? Bill of lading. Okay. The trade document signed by the representative of the country to which goods are being sent is known as consular invoice, but these are not the questions. Let me go to the ones that happened that we have just discussed. Which of the following is a declaration by the captain of a ship as to the cargo on board? It's not bill of lading. It's not bill of sight. Okay. Yeah, yes, we have not discussed this one, so we won't have discussed this one. We have discussed ship manifest, which is not this. It shows, okay, yes, our answer is what? A ship manifest. This is what he's carrying on board, so that's our answer. In the absence of the bill of lading, which of the following is used to declare the goods? The goods. Bill of sight will be used, okay? Bill of sight will be used. Thank you. Which of the following is not a means of payment in foreign trade? This we have not discussed this. A document of title to goods written by the ship owner specifying the certain goods are being conveyed in the ship is a document of title of goods written by the ship owner specifying that certain goods are being conveyed in the ship is known as bill of sight. Okay.